Frasers Centrepoint Trust had a huge meltdown today. The share price actually went to as low as 2.18, notwithstanding after going ex-dividend for 6 cents. And the share price, when they announced the results previously, was 2.32. So it's a 14 cents meltdown despite a relatively flat equities market. Now, why is that the case, ladies and gentlemen? Despite the fact that one of the highest absolute DPU announced for Frasers Centrepoint Trust, yet the share price had such a sudden and a huge meltdown. In this week's video, I will also share with you why, as one of Frasers Centrepoint's former top 20 shareholders for almost 10 years, I've ditched the stock way back in 2019, as I've mentioned in my book, Making Your Millions in Real Estate Investment Trust. The other reason actually that I also want to actually share with you in this video is also share with you what we have been warning on Frasers Centrepoint Trust, regards to its operational degradation, in the last couple of years, and why we therefore had avoided the stock altogether with GCP Global investors all these 4 years. And then last but not least, we actually look forward for you on Frasers Centrepoint Trust whether indeed there has been certain management missteps or blindsidedness as they pursue their aggressive aggressions in terms of aggressive acquisitions. So do give us a thumbs up, enjoy our this week's video. So you see, ladies and gentlemen, this is our first chart. You can see that right up to 2018, the end of December 2018, right up to the 19th of April, around 19th of February 2020, that is one day before the COVID, the share price of Frasers Centrepoint Trust had one of the most fantastic runs. It's actually up from $2.10 up to $3. That is a wonderful, almost 50% up within this period of 13 months, and that's why actually I dumped everything on the above $3, as mentioned in my book, Making Your Millions in Real Estate Investment Trust. Now, as a matter of fact, when I say dump everything, I just want to share with you, ladies and gentlemen. Now, this is actually the statistics of shareholding in Frasers Centrepoint Trust annual report way back in 2019. So as of 22nd November, I was their 16th largest shareholder with 2.12 million shares. So above $3, I actually took back 6.24 million. Yes, ladies and gentlemen, we do not just invest small amount of kacang putih, we invest big, but when we sell, we also sell big, especially when the share price has reached a certain point which we think is actually more unsustainable. But more importantly, we were more conscious and more concerned with what management was doing or guiding at that moment in time, which we wanted to share with you because this characteristic trait, if they continue to pervade right now, then Frasers Centrepoint Trust may continue to underperform in the years to come. So what happened after we sell, ladies and gentlemen? This next chart shows that from year 2000 up to now presently, the share price has been, oh my goodness, you can see it's down, down and down. Okay, in fact, it has not recouped back its $3 level, which we saw in 2020. In fact, you can see from the orange line, it's just a firm down trend all these 4 years. And essentially, in October, when it actually broke it's the lower end of its support level at a 216 level, right down to 190 level. That was a period when we told our GCP global investors that maybe, if you are actually inching back on Frasers Centrepoint Trust, that was a very good value proposition then, at $1.90, coupled with the fact that they give you dividends of 6 cents. So if we superimpose both charts, ladies and gentlemen, you can see that it's clearly, it's been one of the worst performing stock, for a long couple of time, you can see that from 2018, you put both together, the share price actually went from 2.10 to $3. And then from $3 from 2020, it just went all the way down to 190. And right now it's actually hovering at about 216 level. So then again, if you look at the annual report, which I actually stated in my book on chapter 9, I've actually documented, why I bought into this stock, when did I buy the stock, how much did I buy, with all the documentary evidence. So I would actually, like you to actually look at my book, study in detail, give me comments, because as I build up substantial stake in other REITs, I think the similarities, the key traits in terms of the skills used are very, very similar. And well, I made substantial profit on Frasers Centrepoint Trust, which I think you would be able to benefit from that, because I'm sure you are also in a position to make your millions as I mentioned in my book in Real Estate Investment Trust. Now, this detail my shareholding and top 20 shareholding stake and position in Frasers Centrepoint Trust for the last 1 year. You can see, ladies and gentlemen, that when Frasers Centrepoint Trust was listed in 2006, this very first year, that means based on the annual report of 2007, I was ranked as the 16th largest shareholder with a total amount of 800,000 units. As at the latest financial year, that is 2019, I was ranked 16th with 2.12 million shares, and that's what I've mentioned earlier, when it went above $3 in February of 2020, and that's where I actually sold off everything, took over 6 million, took back my 6 over million, and went to invest in something even more interesting. But what led me and to feel convinced that I should be selling at above $3, other than the fact that the share price went up too fast, too quickly, or was it actually due to the fact that we at GCP Global were already deciphering some change in management nuances, some, you may call it, some blind-sidedness of management, or essentially, management not doing what we think they should be doing. Okay, now for us at GCP Global, the best way of showing and knowing what is right and what's wrong, is to look at the results. You can see, ladies and gentlemen, that its latest results, which is announced the week just last week. Frasers Centrepoint Trust actually showed a gross revenue growth of 6%, net property income growth of 5.7%. But what matters most, which is the distributable income for shareholders like you, how much did it actually perform? Oh, it's down 3%. At the DPU level, well, it's also down 0.1%. So, how could it be, therefore, you may ask, that one of the REIT which pays one of the highest half a year interim dividend at 6.13 cents can actually perform so badly. Look no further, look at the NAV, right? So despite making 2 major acquisitions, they increased their stake in Waterway Point by another 10% last year, which we reckon that the price they paid was already too high to begin with. 2 is they acquired a 25.5% stake in Next. Next is in Serangoon, and this was actually a mall that, as you know, that NTUC Mercatus actually put on the market, and you can see that essentially, even despite these 2 acquisitions, NAV did not move up. Instead, it actually went down. Surprise, isn't it? Okay, so it's not surprising, ladies and gentlemen, for those of you who have been following us, and give us a like and thumbs up. And for those of you who just join us, subscribe to our channel, because in our Business Times interview just last month, we have mentioned 2 things. One is that a lack of deals among real estate investment trusts for this particular year is not going to hurt DPU of dividends of a real estate investment trust badly. Secondly, in fact, most REITs acquisitions, have actually not been DPU accretive to begin with, and Frasers Centrepoint Trust is a very good case in point, as I've mentioned in my interview with Business Times as of last week, or rather last month. Now let's look at basically one of the two acquisitions that they made. One is actually the 25.5% stake. You can see that they practically banned, financial engineered, such that they just bought 25.5% so that they can stay at the gearing below 29.5%. The sponsor basically helped them, and helped them to park the assets, so to speak, so that their gearing ratio was still good. But smart investors like you and me, are able to see through that. And ladies and gentlemen, this is therefore reflected in its share price underperformance for the last 4 years. So what's a great deal about Next? Okay, they have mentioned that Next is the largest suburban mall in the northeast, blah blah blah. They mentioned that it's important to be buying a position into that, blah blah blah, because then they become the largest mall stakeholder. In fact, yes, they are now the biggest mall holder with a 10.6% stake, compared to the other players like CICT and TUC. But what's the big deal for shareholders like you? Okay, you have been suffering for a long time. In fact, you can see that this acquisition, which was acquired at a high falls, NPI yield, essentially have not actually helped in enhancing the fundamentals. And true enough, ladies and gentlemen, look no further, because one of the slides that they've mentioned, which we find, very, very worrisome when they first announced the deal, which we shared in the GCP Global Quarterly Investment Classes, is this. Okay, look at the impact of the distributable income is less, it's up, but it's less than 1%. What's the impact on DPU? It's up, but it's less than 1%. Hey, ladies and gentlemen, isn't this therefore, taking the same case and stretching it to the further so that essentially you can actually facilitate this transaction? Again, like I say, ladies and gentlemen, is it actually financial engineering? Is it something that management is just trying to expand aggressively at the expense of shareholders? Well, you be the judge. Do let me know in the comments below. And this is the latest chart from this latest results. You can see, ladies and gentlemen, one thing going ahead that is worrying for FCT is that they have almost 800 million worth of debts up for refinancing this year and next year. So while the Federal Reserve last night increased its interest rates, could be the last one for this year, but the fact is that if this high interest rates continue to hold in abeyance right into next year, Frasers Centrepoint is staring in their face 800 million worth of loans, going to be refinance at a much higher rate. In fact, if we just look at the jump in the cost of funds, it's almost 150 basis points. So 150 basis points on the billion to be refinanced, ladies and gentlemen, is $15,000 additional. Okay, so look at the distribution income for Frasers Centrepoint Trust. You are talking about close to 15% of DPU. Now, does it mean therefore that essentially if this high interest rates continue, FCT would be one of those that is not being able to withstand this higher onslaught of interest rates? Is that why therefore the share price took such a big hit despite announcing one of the highest dividend on a half-year basis? Hope you enjoyed this week's video. Do join us in our video and to join us for our class if you think that essentially we can and are able to continue to forewarn you on REITs like Frasers Centrepoint Trust before the problems become a headache and before the share price underperform, for the last 4 years. This is what we at GCP Global seek to do for you. We've been doing it successfully for the last 34 years. Once again, give us a thumbs up and join us for our notification Cheers, and till next week.